As cryptocurrencies become more accessible and capital is also becoming more and more powerful, the listing of ETFs in Hong Kong, are they a blessing or a curse for retail investors?
Hello everyone! Today we are going to talk about a very important news. Spot ETFs for Bitcoin and Ethereum have been launched in Hong Kong. 3 big companies, China Asset Management, Harvest Global Investments, and Bozera Asset Management have launched spot ETFs for Bitcoin and Ethereum, and they have been approved by the SFC in Hong Kong. This news is very important because it marks another important step for Hong Kong in terms of financial product innovation, and it shows that Asian financial markets are maturing. Let's start with a quick explanation of what an ETF is. ETF is an acronym for Exchange Traded Funds. So it's a type of fund that can be bought and sold on an exchange. Nowadays, there are many kinds of ETFs in the market, such as gold ETF, bond ETF, stock ETF, and of course, cryptocurrency ETF. A Bitcoin spot ETF is a fund that tracks the price of Bitcoin. The way it operates is simple and has 3 steps. First step, the fund company buys a certain number of Bitcoins and stores them in a specific wallet. The value of these Bitcoins is divided in shares, each representing a certain number of Bitcoins. Then, second point, the shares are then listed on an exchange, and investors can buy and sell them just like stocks. Whenever someone buys or sells shares, the fund company will buy or sell Bitcoins accordingly. Then thirdly, the price of the Bitcoin spot ETF fluctuates, of course, with the price of Bitcoin. So the fund regularly publishes the net asset value of the ETF, and investors can buy and sell at the market price through an exchange. Buying and selling Bitcoins through an ETF is a little different than buying and selling Bitcoins directly. It's run through a third party. There are advantages to this approach, which is using trading, through an ETF. It's convenient. Investors can easily access the cryptocurrency market without needing to know a lot of technology or to have to manage a digital wallet. It's liquid because ETFs are listed on exchanges. Investors can buy and sell at any time during the trading day. It's regulated. It's in a regulated framework. So ETFs are protected by traditional financial regulations. And many people will feel safer investing this way. And of course, there are also some drawbacks. The first one, specifically about cryptocurrency. Cryptocurrency prices are volatile and risky. It's more volatile than other ETFs. Then there is a security risk, because these fund companies are centralized. Then they will have the problem of a centralized company, such as the possibility of being sued, to be the victim of cyber attacks. And so you need to choose a fund with a good reputation, the less risky. Then there is management fees. Management fees can affect your returns, and also sometimes the performance of the ETF may not keep up with the changes in the price of Bitcoin. So this is something that can also affect your returns. Then the fourth drawback is the limited trading hours. ETFs can only be traded when the exchange is open, unlike cryptocurrency exchanges where they can be traded 24 hours a day. That's also a problem. All in all, the listing of these ETFs has a big impact on the market and will attract more people to invest in Bitcoin and cryptocurrencies and drive the market forward. Let's take a look at what are the specific impacts of this. First of all, the listing of Bitcoin ETFs lowers the threshold of investment, attracting many ordinary investors. Previously, many people wanted to invest in Bitcoin, but they had not been able to do so because they do not understand computer technology and they don't know how to use a digital wallet. Now, with the Bitcoin ETF, people can invest in Bitcoin as easily as they can buy stocks. Secondly, and I think this is the most important thing, Bitcoin ETFs provide a new investment channel for institutional investors. A lot of the big institutional investors, like the fund companies, were not able to invest directly in Bitcoin before for various reasons. Now, with Bitcoin ETFs, they can indirectly hold Bitcoin by buying ETFs. As a result, more money will flow into the Bitcoin market, promoting the growth of the market. Government agencies can also invest. Insurance companies, banks can invest. They have a lot of money as well, right? And that would definitely be good for this Bitcoin and the cryptocurrency market. Speaking of which, the big news recently is that Switzerland's largest bank, UBS, said in their latest SEC statement that they've purchased BlackRock's Bitcoin ETF, which shows that even the big banks have faith in Bitcoin ETFs. Finally, the Bitcoin ETFs has passed the regulatory review of the United States and Hong Kong and can now be traded on the Hong Kong exchange or the US exchange. This shows that the government considers it safe. And with the government approval, the Bitcoin and other cryptocurrency market will be more stable and attract more people to participate. And that's great. Oh, and in addition, this virtual asset spot ETF competition is also very fierce. I really like that. Not only in Hong Kong, you have like Harvest Global Investments products that will be free of management fees for the first 6 months, while Bozera Asset Management's products will be free of management fees for the first 4 months after issuance. This is the first of its kind in the Hong Kong ETF market, and that offers greater appeal to investors. Overall, the listing of Bitcoin ETFs not only gives more people the opportunity to invest in Bitcoin, but also brings more money and greater security to the market. This is a very positive development for Bitcoin and the cryptocurrency market as a whole. Of course, one thing I'd also like to say is that for us retail investors, if you're tech savvy and you know how to manage a digital wallet, you don't necessarily have to buy an ETF. You can just hold Bitcoin in your own e-wallet and it will pay off. Because in the long run, all of these things are definitely going to affect the price of Bitcoin. I personally wouldn't buy an ETF just because of the downsides that I gave you earlier, right? I still prefer to control my own assets. But I do know a lot of people who would find it easier and safer for them to buy from a centralized institution. So, to each his own, right? All in all, the listing of the first ETFs in Hong Kong is a very positive signal for the development of Hong Kong's, financial market. And ETFs combine traditional financial mechanism with the innovative world of cryptocurrencies, providing investors with a novel way to invest. In this way, investors can access the cryptocurrency market more easily and enjoy more investment opportunities. That's just great. With the continuous enrichment of such ETFs and other financial products, we have reason to believe that Hong Kong will continue to play its unique role in the international financial arena. Good job, Hong Kong. Well, that's all for today. Thank you for watching and I hope this video was helpful to you. If you like this kind of content, please like and subscribe to my channel. I will see you in the next video.